There is a famous saying in the market. It says, amateurs open the market and professionals close the market. Do you believe this statement, friends? But personally, I don't believe this. I will tell the reasons why. You can see here, for example, this is Nifty, Bank Nifty 50-minute chart. I took it for a couple of days, okay? Just observe the first candle. Who is in control? The seller is in clear control, right? So look at what happened on that particular day. It is completely selling move, right? So if amateurs open the market, what should have happened? It should have gone upside, right? Because professionals control the market, right? Usually, as per the amateurs, it should go opposite. If amateurs were open the market, price should have gone upside, right? So this indicates professionals open the market, right? That's why the price went into sideways mode for an entire day, right? Now, look at the next day. Don't believe it for one day. Look at the next day. So, even though the candle looks like a red color, like a bearish candle, but it is a bullish candle, right? Because 90% is a buying thing. Okay, it is a bullish candle. So, who is in control? Buyers. Then, who open the market? Amateurs open the market or professionals open the market? Look at what happened on a particular day. 70% is completely upside move, right? Only, little profit booking came at the end. So, who opened the market on this particular day? Professionals open the market or amateurs open the market? I leave the choice to you. Look at next day. Who opened the market? It's complete selling candle, right? What happened on the particular day? Complete selling, right? Once again, who opened the market? Amateurs or professionals? I'll leave it to you. One more day, sellers are in control, right? So it witnessed selling, but only buying came at the end. But that is still fine. Even if you consider this as exception, it is fine. So here the complete selling candle, this day is an exception, right? Because price went into sideways. It didn't go upside, okay? It went into sideways, but still this is an exception. So here it is a no clarity, right? Because there is a selling wick and there is a buying wick as well. So there is no clarity. Even the second candle displayed the same thing, like buying wick and selling wick. Not much clarity. See what happened on that particular day? It went up, then it went downside, right? So who opened the market? Amateurs or professionals? This day it's a slight bullish candle, right? Because there is a slight selling wick. So who open the market? Amateurs or professionals? Same thing. This might appear as a selling candle, but if you notice, observe carefully, it contains over 60% of the buying wick. So in this case, it is a 60% is buying, but you should look at this gap also. There is a big gap. So even after a big gap of open, price didn't came downside. Usually, whenever there is a gap, usually it tries to fill the gap, but in this case it didn't fill the gap. Even we need to consider this. Okay, so in this case still, this is a big buying candle. So who opened the market? If the amateurs open the market, price should have gone, came downside, right? So this indicates professionals open the market. Do you agree with me, friends? Okay, so if that is Bank Nifty chart, this is Reliance chart. This is one of the biggest company in India. You can see here, right? You can check everything. The first candle bullish sideways. So here bullish upside. This is bearish, bearish and then sideways. So here no clarity because buying week and selling week it went into sideways. First candle complete bearish, price went into sideways. Okay, so you can check everything again. So it clearly indicates most cases, at least 70-80% of the cases, professionals open the market because they know where the price will go, and without much clarity amateurs will close the market. They participate in the end with some of the revenge trades and they close the market. So I will say professionals open the market on most of the days and amateurs close it by booking the loss. Okay, so I hope you got the clarity, right? Who opens the market now? Now, in this video, I'm going to cover four important open types actually. It's also four important elements in open action. And then I will walk through with all these cases in the live charts of Nifty and maybe with some stocks as well. Okay. So I'll explain one by one in detail so that you will get more idea how to interpret and how to understand the open action, especially between 9:15 to 10 o'clock. That open action is very crucial. If you can decode the price action at that point of time, you will be in a better situation and better state of mind and better clarity about the direction to take your trades. Okay, so I will explain all these concepts one by one. Okay, please watch the video till the end so that you will be able to connect the dots till the end. Okay, now what is open law? So open law, as the name suggests, it stands for open is equal to low. Whenever the price opens like this, okay, so immediately there are more buying orders. In simple words or in layman terms, so buying power is more sufficient enough to absorb all the selling power. That's why there is no, uh, price didn't go downside. Actually open is equal to low, there is no wick actually. So this indicates the strong bullishness nature of the price behavior. Okay, so once the price opens, let's say you are observing in 50-minute chart. By the way, I suggest 50-minute time frame is the best time frame for intraday trading. Okay, so if you are checking this after the 50 minutes open low sustains, okay, it means it is open low and there is a high possibility of price going on the upside. Okay, now you should not take the trade just because of the open low. You should not take the long trade. So you should know where, because at certain price levels this open low is very very important. I'm going to cover them in the next slides. So generally you should remember open low means it is bullishness in behavior. Okay, now open high. So open high is exactly opposite to the open low. So whenever the price opens, the selling power is high and sufficient enough to absorb all the buying orders. That's why it results in open high, so which means open is equal to high. There is no wick actually. So this indicates the seller strength actually. Okay, unless the price breaks above this, there is a high possibility of price trading on the downside itself. Okay, so if you sell the strike price, for example, if you are an option seller, if you sell strike price here or little above this, there is a high possibility of you making a profits on that particular day. Once again, just because of the open high, you should not take the trade. Where that open high will occur plays an important role in intraday trading, which I'm going to cover in the next few slides. So generally you should remember open high means it is bearish in nature. Now, open test drive up. This is the third open type in market profile. It's very, very simple. Let's say there is an important price level here. Maybe, for example, previous day high, maybe important round number like 25,000 in Nifty, maybe weekly high, etc. So price opens little above that particular level and it comes down. Okay, it comes down, which means sellers are trying hard to push the price downside, but buyers are very very powerful and they come back and push the price upside, and because of their action price closes like this. So basically it looks like this. It opens a little above the crucial price level, comes back, tests the crucial level, and because of the buyer strength it pushes the price upside. Buyers usually pushes the price upside, and because of the buyer strength it closes like this. So this is called as open test drive up, and this is also bullish in nature. Okay, now this is a simple example. This is a open test drive up in Nifty chart actually. So this is one crucial level. What is the crucial level? Don't worry, I'm going to cover in the next few slides. So this is one of the important price level. Price opened little above that level. It went downside, right? It tested that crucial level, but because of the buyer's power, they pushed the price upside, and because of their power, it closed on the upside, right? So and after that, it rallied on the upside till the end of the day, right? This is open test drive up candle actually. Okay. Now another thing is the last one is open test drive down. Okay, so what it means is it is mirror image of the open test drive up. So there is a crucial price level. Price opens little below that level. Buyers pushes the price upside. Okay, it tests that particular level and it goes upside because the selling strength is very very strong. seller strength, they push the price on the downside, and because of the seller strength, price closes on the downside, and it forms a kind of bearish pin bar candle like this. Okay, so this is called as open test drive down. Okay, and whenever you see this, there is a high possibility of price trading on the downside. Okay, once again, picking this crucial level is very, very important, and analyzing and finalizing this open test drive down, aligning with the previous market trend is also very, very important. But you should remember this thing: open test down means it is bearish in nature. So now you should remember four important things. So open low, first one is bullish; open high, second one is bearish; open test drive up, third one is bullish; open test drive down, fourth one is bearish in nature. I hope you got this clarity, right? Now, this is a simple example of open test drive down in Reliance Industries chart. Okay, this is in previous day high, one of the crucial level. Price opened exactly at the previous day high. It went upside. Okay, initially buyers pushed the price upside, but because of the seller strength, it came back and it closed below this crucial level, right? So this is called as open test drive down actually. Okay, so you can see price traded on the downside for the entire day. Okay, unless price breaks above this level, you can expect only sideways to downside move whenever you witness the open test drive down open time. Now there are several variations. Whenever I explain this open type, many people say, Indra, is this open test drive up or is this open test drive down? They get confusion, right? That's why I aim to cover all those variations here. See, this is one simple example of open test drive up. Is it clear, right? Because price opened here, it came back, and because of the buying strength, it closed here. Now, this is also an open type. Just because of the small selling wick, don't think that it is not an open test drive up. This is also an open test drive up because price opened here, it tested this crucial price level, gone upside, it went till here, but it closed here. Okay, little bit of selling, it's fine. This is also an open test drive up variation. Okay, now the third one is it's a doji. Compared to this, in this case, selling is little bit high, right? That's the only difference. There is not much difference between these three candles. Look at this. Price opened here. Sellers initially pushed hard to push the price on the downside, but because of the buying power, it came upside. It went till here, but sellers entered little bit later. But because of the still price closed here itself, right? It didn't go down below the open level, right? This is still, even though it is a doji, but this is not a plain doji. Okay, if the open and close is here somewhere in the middle, means it is a proper doji indecision. Okay, a equal fight between buyers and sellers. In this case, price opened here, it tested the open in important price level, and it's gone upside, right? So this is, even though it is a doji, this is a bullish doji actually. Okay, so this is also an open test drive up variation. Once again, this, whenever this is selling is little bit more compared to this candle, right? But again, you should not consider this is not an open test drive up variation because of this selling color. Okay, selling candle color. So don't worry, because from here to here, so when I take this, okay, see why I'm saying this is a open test drive up, because from here to here it is still buyers are in control, right? Only sellers are in control in this zone. Okay, so this zone entire zone belongs to this buyers, right? Buying. Only this small thing belongs to selling. So because the price has tested this level, that's why it's called as open test drive up variation, right? I hope you got this clarity. Similarly, open test drive down variations. So simple, this is a straightforward open test drive down variation. This is another variation with a small buying thing. It is still fine. Okay, small buying is still acceptable. Little more buying, doji, compared to this, there is little more buying here. It is still acceptable. Similar to that, fourth one is buying came little bit extra. Still, this is an open test drive down variation, because from here to here it is considered it is buying power, right? And from here to here it is selling, right? So sellers are still strong in this zone. Till here the sellers are still strong, and they tested this. In this case, price has tested then important price level here, and then it closed on the downside, right? So until price trades below this level, okay, below this level, we can expect sideways to downside move. Okay, so that is the power of open test drive down variation. Okay, now what are the important levels? Okay, there are many important levels, like round numbers like 25,000 in Nifty or 50,000 in Bank Nifty, or if it is a stock, maybe 1,000, 1,000 value, 2,000, 5,000, 10,000. So all these things plays an important number, that is round numbers. And number two is swing highs and swing lows on a daily chart. So you can open any chart, which I'm going to cover, in the live analysis. So in any stock, in daily chart, so swing highs, swing lows also plays an important levels in intraday trading. Now, the the best and easily available, the important price level in intraday trading is previous day range, which means previous day high and previous day low. So you should always keep an eye on previous day high and previous day low. I will tell you why. Why? Because, for example, let's say this is previous day high and this is previous day low, right? Now price acted like this. Because of this, price acted like this, right? This is a previous day high. This is the high made on the previous day, and this is the low made on the previous day, right? Everything is clear as of now. Now, what this indicates? So what this high indicates is this is the price level where the last buyer present, right? Above this price level, there was no buyer, there is no buying order, right? This is one way. Or this is the price level where the strong sellers entered the market and they pushed the price downside, right? So I hope this is clear, right? Similarly, what this indicates, okay, so this indicates, this previous day low indicates this is the price level where the last seller entered, right? Which means below this price level there were no sellers actually, okay, or at this level strong buyers enter the market and their buying order absorb all the selling order, right? Okay, so this is the basic understanding of the previous day high and the previous day low. I hope this is clear as of now, right? Now, this range plays an important level for the next day. Please remember to me, friend, this is very important. This range plays a very important for next day intraday trades actually. Okay, I will tell you why. Let's say this is the previous day high, previous day low, price opened here, price closed here. Now, in Indian market, it closes at 3:30, right? So it closed at 3:30. Next day at 9:15, market opened here and it displayed a small candle here, which means price opened very close to the previous day close, and it displayed a medium candle, which means it didn't went near previous day high or it didn't go near previous day low. It displayed a medium, small to medium candle. What this indicates? Friends, this indicates that there is no change in the market sentiment overnight. No fundamental thing happened. None of the countries attacked another country, or none of the reports are out, or nothing natural calamity happened, because the sentiment continued, right? It opened very close, which means there is a high possibility of price trading in the same zone even in this particular day, for the entire day, unless something happens in the live market. Okay, now it's going like this. At this point of time, let's say there is a war started between India and Pakistan. Definitely the price will go down, right? That's the only exception. If something happens in the live market, it is an exception. If it nothing happens, means there is a high possibility of price trading in the same range, previous day high, previous day low, because there is no change in the overnight market sentiment. This is very crucial for intraday trading. Okay, always remember this. Now, see, this is how it behaves. Usually it stays within the same zone. So this is called as actually balanced market. Okay, in market profile world, market profile is a trading technique, or you can say trading ideas, and there are many concepts. It's like an ocean. So one concept is balanced market. So balanced market indicates there is a high possibility of price trading within the same range of yesterday. This is balance market condition. Okay. So now in another scenario, let's say the price closed here previous day, but price opened very close to the previous day. What this indicates? So what this indicates is that something fundamentally happened in the overnight which is positive to the market, at least at the open. Traders perceiving that it is bullish, something, some news came, it is bullish, that is why it resulted in this gap, right? Now if it displays an open test drive up candle like this, which means price went downside. This is a previous day high. This zone belongs to the sellers yesterday, right? And price opened here, which means fundamentally something positive happened to the market. Price opened here, but it tested, which means sellers entered little bit, but it pushed the price upside and it closed like this. It means buyers are very very strong and there is a high possibility of price going on the upside. So you can take a long trade above the eye of this candle, keeping a stop loss below the low of this candle. If you are an option seller, you can sell below the strike price. Okay, the put option you can sell. Okay, so that's what you can do. Now see, this is a simple example of a balance market, right? For example, see here, this is the previous day high. This is PDH, right? This is previous day high and this is previous day low, right? And this is the previous day close, right? This is the previous day close. If you see today's open, it's just very close, maybe 10, 15 points difference, right? So what it means is fundamentally nothing has changed in the market sentiment overnight. It is same. So it means there is a high possibility of price trading within the same zone. So if you are an options trader, so what you can do is you can sell this call option, you can sell this put option, strangle, right? You can do strangle. Once again, if you do the strangle, always place the stop loss at 1.5x or 2x, up to you, okay? But I'm just talking about the direction clarity. You got the clarity, right? There is a high possibility of price trading within the same zone unless something happens in the live market. Otherwise, there is a high possibility of price trading in the same zone. That's what happened, right? Don't worry, I'm going to cover some more live examples on the chart, okay? So this is one simple example for a balance market. So this is one more example. You can see here, right? This is previous day high once again, and this is previous day low once again. This is an example from Nifty, okay? I'm not taking some random stocks. I'm taking examples from Nifty, okay? So price closed here and price opened here. There is not much difference, right? And price difference is a medium candle. It didn't touch the previous day low. It didn't touch the previous day high, right? So, and this second candle, first two second candle is selling and buying. So there is a high possibility price trading within the same zone, right? Previous day high, previous day low. Except this little bit, price displayed that particular candle, right? So once again, you can deploy either a short strangle trade or an iron condor trade, something like that, right? I'm just talking about the direction, okay? So who open the market here? Professionals open the market or amateurs open the market, okay? Now, there is one more example here. You can see here very close, right? Kind of it touched the previous day low. So you can say it is still a balanced market, but slightly towards the bearish behavior, right? And that's what happened. Price went upside and it went a little bit downside, right? So this is how you can analyze where the price will open. That's called as open placement, and the one or two candle represents open auction actually. So by combining this open placement and open auction with respect to the previous day range, you can get a lot of clarity for the open action trades. Now you can see here again the price is very close to the previous day high, but in this case it displayed an open test drive down open, right? So there is a high possibility of price going into sideways to downside move within the previous day range. That's what happened, right? Okay. This is one more example. See here, this is an example for an imbalance market, okay? So this is a previous day high. Price displayed a big gap up open, right? There is a gap up open and also it is an open test drive up candle, right? And you can see what happened after that. It's a clear cut price rallied on the upside, right? Suppose if you are an option seller. So what you can do is you can sell any put option below this candle, right? If you are a future trader, you can buy above this, keeping a stop loss below the low of this candle. I hope I'm very, very clear. So this is one more example. See here. So this is also open test drive up, right? So this look like an bearish candle because of the color, but don't think like that because it opened at previous day high. It tested the previous day high, right? It went downside, but it went up and closed like that, right? It is a open test drive up scenario. Okay. So this is also bullish in nature. So price went upside. Okay. So this is my intraday trading course. I've covered many interesting intraday topics like this in my course. So if you want to know more about intraday trading, I've given the link in the description. You can check there. Now we will look at some of the examples, okay, in live market. So what we can do is, I will go to Nifty. Okay, see here. Just 1 second. I'm opening this tool. Okay, I got the tool. So now you see here, for example, so this is the previous day range, right? Somewhere little upside. This is the previous day low. See here, this is an open high, right? So open high above the previous day high and candle closed below this, right? So which means clear case of bearish in nature. Who opened the market? Amateurs open the market? No, right? This is a professionals close open the market. So a high possibility of price trading sideways to downside. You can see it went into sideways mode, right? Now I will clear this. Once again, for example, in this case, this is the previous day high, this is the previous day low. See here, price opened uh, close to the previous day close, but it displayed an imbalance market scenario, right? See, if the close is somewhere here and if the open is here, it displayed a medium candle, then you can expect sideways market within the previous day range. But in this case, what happened was, this is the previous day high price, the close is also very close to the high. Price opened very close to the previous day close, but it displayed an imbalance market scenario, right? So in this case, buyers are in control, right? At least if you consider this 1 hour action, buyers are in control, price went upside, right? And this is an exception because there is a big gap up down open. This gap down open indicates buyers are in control, but big buying came, right? Now, this kind of days comes whenever there is an big fight between big buyers and big sellers. So whenever you see these kind of days, it is better to avoid the trading. Okay, so this is fine. So if you check earlier days, for example, if I will go a little bit here, okay. So if you check this one, so this becomes the previous day high. This is the previous day low, right? See here, okay, price opened with a gap up, but immediately in the second candle, the open action, it touched the previous day low, right? And it started consolidating here. So this is called as price acceptance, okay? It should have bounced back immediately, but it didn't bounce back. It's consolidating exactly at previous day low. So what this indicates is bearishness, right? So price broke the previous day low and it went into downside, right? Here, this is previous day low, this is previous day high. Price is, opened, price is close is also at the middle, price opened at the middle, displayed a, little buying candle. So we can expect sideways move. That's what happened on the complete sideways move, right? Okay. So I will go for stocks. Okay. If you think, some Nifty is behaving like this, it's not the case. For example, I will go to TCS. I don't know. I have not checked TCS chart, but let's check. Okay, so even in TCS, you can see this is an imbalance market open, right? This is the previous day high, this is the previous day low. So the first candle itself is an open test drive up candle. It is a bullish candle. Price went into upside, right? So in this case, this is the previous day high, this is the previous day low. Price displayed a rejection candle at the in the beginning. So we can expect only sideways mode, and it went into sideways mode, right? Now this day is an exception, as I said in Nifty, that's fine. And no, it's TCS is following very similar to Nifty. Probably I will check for something else like maybe Axis Bank. I'll go a little bit backside. Okay. See if you see here, for example. Okay. So this is an imbalance market open, right? Imbalance market, sellers are in control at the open, and you can see downside move. So here there is not much clarity, right? It is looks like a selling candle, but 50% is buying. So we can expect sideways. It went into sideways mode, right? Okay. So this is how one can use this open types and balance market and imbalanced market condition to take the trade. So I'll repeat once again, friends. There are four open types. Open low is bullish, open high is bearish, open test drive up is bullish, open test drive down is bearish. So price opening with very close to the previous day close within the very close to the center of the range and displays a small candle. It is a balanced market. There is a high possibility of price continuing within the same within the previous day range, and in imbalance market price opens above or the previous day high or very close to the previous day low and displays, suppose for a long trade it displays open low or open test drive up, then means there is a high possibility of price trading on the upside. If it opens near previous day low and if it displays open high or open test drive down, there is a high possibility of price going on the downside direction. This is all I wanted to cover in this particular video. I hope this video is helpful, friends. If you want me to cover any other interesting intraday topics, let me know in the comment section. I'm happy to cover those intraday topics. If I don't know, definitely I will say no, or I may not make a video on this, because I have seen people, they say, Indra, make a video about this indicator or make a video about this particular chart. If I have not used it or if I don't have mastery on that particular topic, definitely I'm not going to make it, right? I don't want to make videos unless just for the sake of making videos. So if I don't have a clarity or knowledge about that particular topic, definitely I'm not going to make a video on that particular topic, because that should come from the heart, right? So if you need any clarity about any other interesting intraday topics or options trading topics, please let me know. I will plan to make a video about that particular topic. So that's all I wanted to cover with this video, friends. So we will see you with another video with another useful content. Until then, thank you. See you. Bye bye. Have a nice day. Enjoy.